Hello friends, welcome back. Hope you had a very good weekend, and today I'm going to give you a very important or it's going to change your life, that kind of a video. If anybody is looking for some kind of a passive income, it's not that completely like it's going to be a regular income, but it's a kind of a passive income, or somebody wants to create a lump sum amount or want to build a wealth over a long time, just to retire early. This video is for you. This is not for speculation, or this is not for gambling, or this is not something that become rich in one day. It's not. It is a constant. It's going to be a small and steady journey. If you follow this method, I'm sure you are going to have a regular income. The key topic is today. Okay, watch this video fully and leave the comments if you are if you find interesting, or if you have any kind of a feedback, do let me know. But please do like my video and subscribe to my channel and share this with your friends and family if you really feel this video is worthful for you. I'm Sundar and you are watching Mindful Finance. Okay, so I told that this is going to be your passive income stream, but you need to have very strict fundamental rules when you do this one. You should not you need to be very disciplined. Okay, that's a very important point. If you are not disciplined, then you cannot sustain in this one. Second, you have to use only the money which you feel that this money is right now. I don't need this money, but this money is just for my learning purpose. Don't feel that if the money goes from you, if you lost that money, it should not hurt you. The reason why I'm telling is, without feeling or without encountering a loss, you will never going to learn anything. You will have loss for sure. But the point here is, the way which you are going to do is based on risk management. If you don't follow the risk management, that is my second point. If you don't follow the risk management, you will immediately get out of this trading business or this kind of a trading mode. Okay, this trading is not your cup of tea. Just please go and invest and sit for long term. Don't do this trading part. Okay, this is very important, that this is not intraday ideas. Okay, you are not going to make money in one day. The technique which I am going to tell may help you in intraday, but I prefer not to do that. This is purely for swing trading. Buy today, sell tomorrow or next week or next month, doesn't matter. So these are the three parameters. What is the first one? Discipline. Why I'm saying discipline? You should not keep on watching your monitor or the trading platform or anything. Just sit back, relax, set the rules, and just be focused on your other works. Second, risk management. You have to manage your money properly. If you feel that the money is important for you for that particular time, please don't do that. Have some kind of even if you have some kind of say 30,000, 20,000, 50,000 is enough. You don't need a bulk 10 lakh, 20 lakh kind of a thing. Just start with a minimal amount. I'm damn sure slowly you are going to accumulate the wealth. Okay. Third one is, this is for swing trading, not for intraday. Please don't get crazy about this intraday and lose your mind. Okay, let's get into the technique now. Okay, so for now, I'm taking Nifty as an example. Okay, let me change so let's take Nifty as an example. I'll show it in Nifty, but we can do it in stocks also. That also I will tell you what to do. Okay, when you are doing this swing trading, entry and exit, this both are very important. Lot of people will give you a guidance about entry. It is like Abhimanyu, right? You know Mahabharata, where Arjuna's son Abhimanyu get into Chakravyuh. He knows how to enter the Chakravyuh, but he don't know how to come out of the Chakravyuh. Trading also is the same. Like lot of people enter into the trade, they won't know when to exit or when to book the profit. So that is very important in your strategy. So let's understand two things. You should know the basics of candlestick. Okay, if you don't know the candlestick, there are n number of videos available in the market. Please go and try to understand the candlestick. My understanding or my assumption is you guys know basics about candlestick. Okay, I'm starting with that particular understanding. Okay, so now here So market is at all-time high now. Now everybody has a question now, where to enter, how to enter, what to do now. Always understand, you need to know support line and resistance line. What is support line? Support line is the place where more buyers are available. For example, you might be going and checking a washing machine to buy in a particular shop, say Chroma or any place. You are daily going, or say take an example, iPhone. You are keep on watching the iPhone price. So iPhone, assume that iPhone launched at 75,000. Okay, you go to the shop today, 75,000. No, I will not buy. You come back again. So you keep on going and coming, visiting the shop and checking the price. You keep on doing that. It stays 75,000 and you are not buying it. One day 75,000 comes to 70,000. What happens now? 5,000 is reduced. Now you will feel, okay, it is reduced. Shall I buy now? Or it will go further down so that I can buy in another lower price. Now that confusion starts now. Right? Everybody faces this problem. Some people are there, even 5,000 reduction is, they feel okay to buy and they immediately will go and buy at 70,000. Now what happens? Whoever like waiting for, it will go further to say like 65,000. What will happen? No, when people start to buy at 70,000 price, again the demand will increase, the price will again increase, and it will never going to come back to 65,000, and you are going to miss the opportunity to buy at a discounted price. This you face lot of time, right? Some people, sometime it may go to 65,000. You might be lucky, because the reason is people may feel that even the 70,000 is not a lesser price. So in that scenario, people will wait still. So what will company will do? Okay, let's try reducing further, because you have so much of supply, so much of iPhone is manufactured, and they have to deploy that to consumer, so that they have to reduce the stock. Right? Warehouse has to be cleared out so that the next version should come into the warehouse. So they will try to reduce the price. So who are like waiting for further long, sometimes they will get benefited because they get more discounted price. So this is called supply and demand. Now to understand what is the supply value or what is the demand value, that is where you will come to support and resistance, or the trend lines. Okay, the trend lines can be drawn in two ways. One is angle trend line and the flat trend line. Okay, I'll show you a set demo. This trend lines always has to touch 2 or 3 candles. Okay, so take an example of this. I'm going to draw an angle trend line. Angle trend line has to be drawn at any angle, like any angle you can draw, but it has to touch 1 or 2 candles. If I draw like this, okay, see when this load, first of all, assume that you are here. Okay, now you would have drawn a trend line like this, so that it touches this and this. So it is going here. Now if you see, it is going up and coming down and touching this angle trend line, and then it is bounces back. So this is called angle trend line and angle support line. Similarly, if you clone this one, okay, and keep it exactly at top of this, if you see, it touches here and it is going up, and actually it is touching this also, right? It is the resistance line. So this is angle resistance line, and this moment is called channel pattern. Okay, and it touches, and whenever this trend line breaks, people will expect it may go down further. Okay, because it's a risky. When it goes down, then you have to check for, you need to check for horizontal support and trend line. You have to find out which are this area it went down. Okay, first it went down here, right? This is your, so when it goes down, it breaks. So this becomes your support line. Okay, so this candle bottom will become your support line, and again it touches the support line, it is breaking the support line, right? So now people are feeling that, okay, this price is lower price for me. Okay, whoever bought at this area, which area, whoever bought at this area, okay, they will feel that when the market goes up here, they will feel, okay, I missed the opportunity, right? And immediately when it comes to this area, people will go and try to buy the stock, because this is the demand area for me. I feel like if I buy this dip, I'm going to accumulate more, and average going to be better for me. I'll buy more quantity and average will be more, and when it goes high, people will enjoy the momentum, right? If you see again this trend line, if I extend, right, see, it came inside the channel, but again it came down, right? Now what you have to do is, you have to shift your trend line to this low. Okay, this trend line has to touch this low. Now if you see, it is going up. Okay, this is your resistance now. Okay, this is your resistance now. So when it goes up here at this point of time, it is trying to, it has broken the resistance line. So people will try, okay, it has broken, and they'll enter here. But I'll tell you the trick, it is not the correct one. It goes up and there is no demand there. Okay, there is no demand there. There is but more supply is in this area, and started to fall. Now the trend line which I drawn here, this angle trend line, if you see, it is coming and touching the same line, and people felt that this area is a good price to buy, and people buy at the area. But if you see, this is our main support line. Okay, it went till there. So whoever bought this particular area, when they drawn a trend line, so they will feel this price is a good price for them, and people will buy there. Okay, but as I mentioned, right, 70,000 iPhone price, still people feel that 70,000 is not a good price for me, and people wait for you. And that is the time it goes down, but it comes to this support line, because this is the multiple support, it is there, double bottom this is. So here people feel that this is a more important support, and more buy happens at here, more demands are there, so it bounces back, right, and it goes up now. So next is you have to draw another trend line, because you made two, right, so you draw like this now. Sorry. So if I draw this angle trend line, now you see that is where our current market is struggling. Okay. Now what do you feel? Here I'm going to extend this. See, it's when a trend line is broken, okay, that trend line is no more valued. Okay, it's not a valid trend line anymore. Okay, so you can delete this trend line now. But support remains same. Okay. So this support is still valid support. Okay, that is where it took a support and it went, right? Now if you see what is the channel it is making. Okay, so this is a pattern you can see. These are the supports, multiple support it has taken, and it is going in this way. So this is a very good pattern. Okay, it's a bullish pattern actually. Okay, if it may consolidate over here, but it is a good pattern. Okay, but anyways. So this is how you have to draw supports and resistance. Okay, that is where you have to, very important thing to understand now. Whenever support comes, you need to be ready to buy. And okay, for example, in this area, right, we discussed this area. If I go to 1 hour candle, see it broke on the support line. It broke on the support line, this red line, right? This red candle, if you see, it broke on the support line. Till this green candle comes, you won't know market is going to go, it is getting reversed or not. This is what the challenge is. Everybody asks, okay, now it is there, now it will go up or not. That is where our method is going to work now. Now if you see, let's go with this part. So it came this level. Now what to do? Always understand, you need to have a confidence. Conviction is a confidence to enter into this trade. How will you make that confidence? See, if you go with the price action, what happens is, as per the price action, what happens? No, if you would have drawn this trend line over here, if you drawn this trend line like this is your support trend line, like angled one. If you drawn this one, it broken this one, it is going down, it's keep on going now. The price action, what this is this pattern is called morning star, which is, you'll have one big red candle, and you'll have one it could be doji, it could be a small candle, whatever it is, right? There will be small candle, and you'll have one big green candle. Okay, this is called morning star. So normally morning stars are good at the bottom of your trend. If it is going down and it has made a morning star, even if you see here, this is not a morning star, but it's a bullish candle price action, but it is not proper gives any conviction. Next candle is a red candle. So here also you had a morning star. Normally what happens is, when the morning star happens, the larger green candle, right, at least it will retrace almost 50 to 70% of this candle, and then it will reverse. Okay, so normally people will enter at this point, this area, when it reaches, this candle reaches here, which is 22,033, people will enter, because see, there is a trend line going on, it is cutting that. So this is the area people will try to re-enter. But what happened? It went down, it failed. Why it failed? I'll tell you. This is where I made one video about divergence, which is a very, 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 very important topic to understand. Please, if you didn't watch that video, go and watch that one, because that is an important one. So if you see the divergence, is there any divergence here? See, this is low. It is making lower low. It has made a lower low, right? It has made a lower low. That is proper downtrend. I don't see any kind of a reversal. See, divergence is something like, assume that you are sending a rocket. Okay, a rocket is propelled into the air. Now it goes to the high, and you now turn off the engine. When you turn off it, what happens to the rocket? The speed it went, because of that momentum, it still goes up, but there is no actual strength in that. Because of that momentum, it is traveling, it will travel to some distance, right? And then it falls. So this weakening of the strength, it gives the idea of it is going to reverse, right? So that weakening is what you have to understand. That is what this divergence helps you. So when it goes, it will keep on making lower low, lower low. That means there is no weakening, right? It is still going in a very good strength. But check this next one. What happened here? It is making lower low, but it is making higher low in our, you see this one, right? It is making lower low, but our RSI is making higher low. So this gives an idea that the momentum is weakened and it is right. Next, you have to find out, okay, what this is a big red candle, right? You cannot enter. If you are strong, if you are okay, you can enter here, okay? Because you will get more profit and your stop loss is less. You can have your stop loss here and you can enter in the next candle or anywhere here you can enter, or you can wait. You see a green candle went up and see this one, it traced 50%. You see like this, right? It retraced to this level, this angle. It went up and it came down this support line. It came to this support line and then it entered. So you can enter, wait, and you can enter here also, but you can enter here also. That's up to you. So I normally will enter this area or this area, so that to measure your how long are you to stay in the trade, right? That is what the next one is. That for that you need to use this. If you go to the trading view, you'll find this short and long position. I'm going to long. Long means buy. I'm going to go for long. So go for long. Okay. Give this. Click on this one. Okay, and place it here. This is your stop loss. You should not exactly place this. You have to bring it a little bit lower than the candle, so that this is your stop loss and this is your entry. You can go with 1:1 or 1:2 based on your capability. You can first start with 1:1 ratio, which is here. 1:1 is your risk reward ratio. So you entered here, you are going to exit here. Okay. So this is 1:1 ratio. Then when you achieved that, what you can use, you can slowly increase your stop loss, which is you can move your stop loss to here, wherever you entered, so that your profit, you are not going to, because you entered here, at least this area, you at least if you lost your trade, you will exit without loss. What money you bought, that money you will get again, right? There is no profit, no gain. You can do that way also, or you can rise this one to any of this candle, okay, here, so that this profit you can hold, right? If you do this, your stop loss may hit here, okay? So this much profit will exit. But if you continue with this stop loss, okay, this stop loss, what can happen is you can go till 1:2 also, okay? So this you can see 1.9 and you achieved that one here, right? So this is the important one. You have to get the trend, find the low, find the support, and look for divergence. And the next big thing is, this is called, whenever it goes below the RSI 30, okay, which is called oversold region. People are tired with selling it. Then people will enter for buying. So first, who are like in a FOMO kind of a mode, they will buy here. Who are having a patient mind, they will buy here. So that is the point, because this is a oversold region. So this low, right, without seeing a divergence, people will end up in buying it. That is a panic buying or FOMO. But people who know concepts, they will buy here. Who are smart and mindful, they will buy here. Now you got it, right? Where you have to buy and how you have to exit. So this is in Nifty. Let's see some stock. Natco Pharma. Let's take a Natco Pharma. I'm going with the 1 day. Let's go with the 1 day chart first. See, these are the patterns which you can learn. There are different patterns are there. Okay. For now, let's only focus on simple patterns. Okay. Now let's see. Assume that this was in current scenario. We don't want to go to the go and analyze in the back. The current scenario, what is happening? Let's analyze this one. Actually speaking, this pattern is called flag and pole, and it has given a breakout. I actually in my earlier video I marked this one. This is the target. I have already marked my final target for Natco Pharma. Let's see where to enter now. I told you to check the divergence here. See, this is making higher low. So this is my trend line now. It has reversed here. This red candle. It reversed. From here it reversed. Right? And it came down this area. Should I buy here? You see the divergence here. It is still in the momentum. It is going up only. So if you are in a buy mode, buy here. It's okay. It is okay because it is in a momentum. It is still in the, it is having the strength to go up. But whenever the pattern, the thing is within this range, which is 70, RSI is like 70, this one, right? Oops. So when the RSI is within this 70 and 30, That means this is like a side, most of the time it will be sideways movement. Okay, only the trend reversal or anything happens above this. If it goes above this 70, there will be a big momentum. Similarly, if it comes down, there will be a big momentum. We need to be careful when it goes to above 70, means it is overbought region. So similarly, what we saw oversold region, this is overbought region, and people will start to sell or book the profit at this area whenever the RSI goes above this one. But that is where that rocket proposal happened, right? It turns on off the engine. So it goes with that momentum. Some people go and buy here because of that momentum, it goes for some time. To capture that momentum, people go and buy only in that region. Like if it goes above RSI 70, they will buy, stay for some time and just exit. That is another way, but we don't want to go in that way. Okay, so you touch this one, and if you see here, there is no divergence. It is higher low. Here also, next also, if you see, it is a higher low. So here, when it reversed, right, there is no candle pattern or anything. Okay, I don't see any pattern here. It's a bearish candle. When I realized it would have gone here, right? If I enter here, I don't have, sorry, if I enter here, there is no way I can put my stop loss, and that I'm not able to figure it out where I need to keep my stop loss, because this is not a right pattern for me. So if you see this one, this candle, when it made this bullish candle, okay, at least here, if I enter, I'll tell you what I will do is, I normally enter above this green candle, and below this is my stop loss, because this is a bullish candle here. So, but don't take this trade, and just I'm guiding you. There are scenarios people take this kind of a trade, but it's a very risky trade. Okay, I can mark. This is my stop loss. Go for 1:2, right? It came down, again down, and finally it achieved the target. Where it achieved? Still it is open, not achieved. Okay, just check and see how many times it came down. Okay, you'll get panic. So it closed now. It achieved the target here, right? This area it achieved. When you enter here, when the entry would be on March 24. March 24 you would have entered, and it happened on June, March, April, May, June. Third month it happened. So you have to be very patient to get this 1:2 swing trading momentum. But now if you see, it is going high and high, right? So that is a different level of trading that I will teach in the next any other video. So that I will guide you in another video. But basically, to understand the entry, right, this is how you have to enter. So the best entry is seeing the divergence. Where you see the divergence, it is making higher low, but it is lower. So if you see, there's a divergence here. So only I will be entering at this point when it made a divergence. Okay, but normally what happens is you will face two divergences in some cases, which is why it came here. This is a very rare scenario. Okay, this is a very rare scenario. You see, this divergence broken. Sorry. So assume if you had taken a trade here. Let's mark move my target here. So assume you entered here. Okay, let me bring my long measurement. So I entered at this area. At this area I entered. This is my stop loss. See, 1:2.87. Yeah. So this is my target. I achieved within how many days? This is May, 14th May, and this is 23rd May. Within 10 days I achieved. To calculate the risk, the amount which you would have received. I'll show that one. I'll show you how much profit you would have received. Assume that you have 50,000 rupees. So you entered at 983. You entered at entry, exit, capital, unit, bought. So you entered at 984, for example. Entry is 984. And you are going to mark your exit also, which is, we don't know the exit now. Okay, one that will take care of it. So, but now when it touches the 1:2 ratio, which is, so here, if you touch 1032. So capital is 50,000 rupees. Here, how many quantities I would have bought divided by this entry amount? I would have approximately bought, say, 51 quantities or 49 quantities. Now, what is your investment amount? This much. What is your final amount? This much, equal to this minus this, which is 2,352 rupees you receive, right? So what is the percentage it increased? Let's see, equal to this minus this divided by input. This is 5%. Within 4 days you made 5% of return, right? This is how you have to calculate. See, when you see in a 1 hour candlestick pattern, if you see this low and this low, lower low. So if you see in 1 hour candlestick, just see this one. It has made a lower low, but you can see a higher low here. So it has made a higher low, but the day entered, people would have entered here, right? The FOMO people would have entered here, not FOMO people, the real traders who knows this is a divergence, they would have entered here, right? Even if you have missed that out, next day you can make a proper, very clear cut decisioned entry you can make. If you see, it has started here. This is making higher low, right? If you see this one, this has made a higher low. This is made a higher low. Candlestick also made a higher low. So it's very clear cut direction. It's in the momentum. You can enter here. So assume you entered at this area. Okay, and this is your stop loss. If I see 1:2, yeah, this is 1 hour candle, by the way. If you see, I entered on 5th June and I exited on, still open. Yeah, it has closed on 10th June. I entered on 5th June and exited on just 5 days. So let's see, calculate this one. Now the entry price is 1007. Okay, entry is 1007. And the exit was 1121. With the 50,000, I would have bought the same quantity, like 49 quantity, same thing. But my return is 11%. Last time I made 5%, and now I'm making it 11%, right? So that is the power of swing trading. Let's take another stock for your clarity. Let me pick another stock for you. I'm going to pick latent V for you. See, these are stocks I'm going for very long as an investor. But still, let's take an example of, if you see how can you find this low, this particular low, right? This trend line, you can draw before even it reaches, see, if you draw this trend line, okay, this high and this high, you just need to clone this one. You just clone this one and bring it to the bottom area. Now, you are already, see, even this low is not happened. This is not happened. I'm marking at this level and cloning it. I am waiting for this low now. You see here, it is making lower low. It is making lower low. You just look at here. It is making lower low and it is getting reversed. Now let's go to 1 hour candlestick. Why I'm going to 1 hour is to make a conviction whether this is a good trade or not. Now if you see, you can see a divergence. This low and this low. See, even here also divergence. Everywhere you can see a divergence, but it didn't came to a support line. Okay, still it is a down trend. Okay, if you see this low and this low, you can still see a divergence, right? You may feel like to enter at this point of time. At this point of time also, when you are in this zone, obviously you will feel to enter here, right? This is a oversold region and it is making a divergence. People may buy here also. There are a lot of chance that people buy here because it is making a lower low. For that, what I'm going to tell you is very important. Just focus on this one. That's you have to draw 3 EMAs. Okay, right now there's a indicator called multi EMA. Enable that multi EMA. The input region you mark in 9, 14, 50, 100, 200. Okay, these are your EMAs. I think the colors are not visible. Let me make it a very dark color for this one. This one, yellow is the last one. What color to make for yellow? Let's purple or something. Okay, so make it like this. Now you have all the EMAs. Okay, so blue is the 9 EMA, right? In my last video, I shown you the method for finding using, what is that thing? So last time I told you about super trend. In that I have shown you a crossover, EMA crossover. Similarly, you see the EMA here. Is that EMAs are making sense for you? No, right? All the EMAs are low. If you draw Ichimoku cloud and other things, you will find out the proper entry. That is also you can validate. So combine our strategies. When you combine this one, you will get a very good signal, right? So nowhere the crossover happened, but here in this area, if you see, there is a crossover is happened, like, see, right? So you can enter here now, where this one. So if we enter here, 1:2. Now let's go to a day view. Okay, so you would have entered here and stop loss is below this. See, even though if I mark this one, the problem is this entry. If I take this entry, right, there's a resistance line going on. Clearly, if you see, there's a resistance line going on, and this is the resistance line, which is very important, okay? Because here you may need to be very careful. You see what are the things happening at this point of time when it hits the resistance. It is not going above this line. So there is no RSI is not going above 70. So it's not getting the breakout, because here you need to expect a breakout. For breakout you need more strength, so which is not happening here. And if you see, there is a crossover done. It is going down. It is not in a good momentum. What will happen is you will end up in stop loss, or you are going to lose this trade. Okay, this trade is a failure trade for us. If you take this one, because there's a chance that we will end up in certain trades we'll end up in loss, but you have a proper conviction. As we are a mindful strategies followers, what will happen is we'll wait, okay, without stop loss. Okay, there are scenarios that you can go without stop loss, which if you are very confident, okay, as I told you, right, sometimes there might be a different scenarios happen. What happens is you entered here. As I mentioned, don't deploy all your capital. Like 50,000 is something like for your trading, but you need to have 1 lakh as your capital. Okay, don't lose your entire capital. 50,000 is what you are going to use when you have 1 lakh. If you have 50,000, you have to use only 25,000. Don't use the entire 50,000 for your trading. Okay, so now assume that you had 1 lakh and 50,000 was deployed here, and it touched this resistance and came down. If you see this one, this is the low. Okay, and again what happens, you are having another fall, but it is another divergence. This is another divergence. You can add one more 50,000. Okay, let's see how much profit we are going to get in this one. First entry is here. Okay, second entry is here. Okay, 50,000 rupees. What is the first entry? 348. Okay, and I am adding, let me show the Excel sheet. Okay, the first entry is 348. Second entry is 335. Again, I'm not going to deploy the entire one. I'm going to use only another 25,000 here. Okay, so here this one divided by this one equal to, assume this is 74 units. Then here 143 units. Okay, so first I bought 143 units for 49,000. Second one I bought for, okay, so total investment is 74,000. Still I have 25,000. Okay, so this time the next time I will not do this. If this fails, I'll exit the trade, I'll book the loss. Okay, that is how you have to go. Okay, always don't keep on adding this money. You'll end up in a problem. Okay, so here, so I invested this much. Now the exit. Let's see after coming here. Okay, now your target is getting changed. This is your entry now. This is your entry and this is your stop loss. 1:2. Okay, almost here it achieved. What price it is? 381. Okay, quantity is this plus 217 quantities. The percentage is equal to how much current price? This one minus this is my invested amount. If I do this, I will know how much I received. This 11%. Oh, okay. Let me put it again. Some wrong. Okay. Invested amount is, current amount is this one minus invested amount, close bracket, divided by invested amount. This 11%. So I made 11% from this trade, even though it looked like a loss trade, but end of the day I made a very good profit, 11%. How much I made? So I made 8,000 rupees profit from the 75,000 rupees. When I entered, the entry date was, the first entry was here, which is December 22. Okay, and I exited on July 23. It's a very, very, very long trade, right? It's a very, very, very long trade. Almost 6 months you have to wait for this one. So is it a good trade? No. I'll tell you the reason for this one. Why? Because when the market is, when it is in a downtrend, there's a saying over there. Don't try to catch the falling knife, because this is a falling stock. While it is falling, don't try to catch the stock. That is the thing I wanted to teach you in this chart mainly, because don't try to enter in a downtrending stocks. Only enter when you see uptrend stocks. So practically seeing where you are to enter is, okay, when it reverses the trend. So always you should not enter downtrending stock. You have to pick the mistake you made is here. This is a downtrending stock. You should not pick a downtrending stock. You have to find a trend reversal stocks, and it is in an uptrend. So you have to find the trend reversal uptrend stock. So you have to find, so this is the highs. Okay, it has to break these highs. So first it broke. See here you made a small highs. You can see it has making a small highs, right? It is breaking the highs. Okay, it's a good sign. But this high has to be broken. If you see, so this high here, if you see this high, it is trying to break, but it has fallen down. Okay, always don't enter at the resistance level for the buying side. Okay, now it got reversed. If you see, now it got reversed. So if you see here, there's a divergence, right? This low, there is a divergence here. Okay, there's a proper divergence here. So now you can enter here in this stock, where this is a EMA also in a good side. All EMAs are like 9, 20, 50, 100, everything is in a proper alignment here, right? So now you can enter this one. So you entered here above this green candle. Okay, and here is your stop loss, 1:2. Yeah, 1:2. You see it has given a very good return, right? Now you see how you entered at 379. You entered at 379, which means equal to 379 you entered. So you would have bought approximately 131 quantities. Okay, there is no second entry here, right? Now the exit is 416. Okay, now your return is 10% in this one. Within 3 days you made a 10,000. So now I hope you understood the swing trading method using divergence alone and finding the right stock at the right price and at the proper exit. Now you know how to find the exit also. 1:2 ratio, find the pattern, find the divergence, find the momentum stock, and have the proper risk management. Don't deploy all your capital. Do it mindfully. Okay, if sometimes you may end up in loss, book the loss. Okay, don't worry about that, because if you start holding the loss, you may end up in more loss. If it hits the stop loss, gracefully get out of the trade. It's good. Okay, don't worry about that one. Sometimes you get losses also. If you get scared of losses, you cannot survive in this trading business. Else just go into the investment mode and play safe. Hope you like this video. Share it with your friends, and don't forget to subscribe and like this, and put your stocks if you want to review those stocks. Okay, thank you.